Mahantesh Sabarad is now joining us now to talk more about market. Mahantesh, the market may have come down lower, but one section of the market in the last two sessions are getting almost re-rated, which is OMCs and PSU banks. Which out of the two you are more comfortable buying at current levels?
So I think it would the PSU banks, which are far better related to the OMC. OMC is, as you are aware, quite cyclical, linked to the prices of oil globally. Many of the oil geopolitical tensions, of which we are not really immune. And so this re-rating that seems to be happening on the oil companies is a bit of a worry. And the push is too large for the future ahead in terms of outlook. The PSC banks are far better because while the consumption story is still yet to pick up, we have the corporate story in terms of capex growing quite well, and banks are well poised to capture the next round of interest rate reductions that we might see ahead. From a NPA perspective, that is quality of book perspective, to NIM perspective, to even growth perspective, everything seems to be in a sweet spot. They are well capitalized as well.
So that's about the PSU banking space. But for the markets, let's take a look at some of the result reactions coming in. JSW Infrastructure just reported its earnings. So let's take a look as to what the stock is doing right now. You also had other names like Engineers India, which reported a good beat, and all of these stocks are actually seeing a reaction as well. Nuresh, if I can come to you for Engineers India, we have already seen a rally in OMCs. Do you think Engineers India could be the next one to follow? Because of course it's one of those, consultants for them, as well as give us a sense on JSW Infrastructure if you have enough chart history now.
Engineers India as such has moved up already over the last 3-4 months. So from 120, 150 levels, the stock is now at 250, 270. So in this band, the risk reward is not great, but one can continue to ride on because the stock has come back above the highs of 2017 and almost 2010 after a really long time. So in this case, it's a hold. JSW Infra, although the charts are not much on an extreme short-term chart, till the time the stock holds 220, the bias remains positive.
The stocks which have suddenly perked up in trade, one is Swan Energy. Pull up that one. In fact, increasingly, though the numbers came out last week, this stock is now being seen as a more of a defense play after acquiring that Pipavav shipyard than a LNG terminal. Mantesh, have you looked at Swan?
Not really.
Not really. Okay, I thought so.
This is
Kunal, what
things-
about charts then? At almost nearing $700.
Yeah, so I think the last two quarters have been exceptional in terms of volumes for Swan. The last quarter volume was almost 34 crores for the stock, with an average volume of just 6 to 5 crores. The stock gets seen on a quarterly basis. So that itself, tells you the jump of volume and the strong participation the stock has shown in the previous quarter. It moved from 300 to 525, and now it's just seeing a strong follow through up move. So it's a strong volume based up move, which means that this trend should last for the stock. The only concern with the stock is the recent rally in terms of the prices on the weekly charts has brought the indicators into a bit of overbought territory. So the RSIs are almost 88, 89 for Swan on the weekly time frame, which means there could be a potential that in the next 4 or 5 weeks you might see an odd phase of a correction for the stock. So buy on dips in that regards could be a good strategy in case if the stock dips down towards 600 to 620 odd mark.
Okay, just looking at some of the other movers then in trade, while of course it's banks which are a big drag, Axis, HDFC Bank, ITC, Adani Enterprises as well have now drifted into the red. And even Nestle Maruti have quite come off from where they started off in trade. Bharti's flattened out. Tata Motors ahead of its numbers as well is getting a little bit flat. But Kunal, earlier in the day we were talking about, or I think yesterday, Tata Motors versus Maruti. Well, Tata Motors definitely is now the most valuable auto company. How do you stack up the charts of both, and where is it that you think there is still opportunity to buy?
So Maruti could be a fresh candidate of a buy. Tata Motors is still quite bullish in terms of the chart structure. My sense is that this rally over the next maybe couple of quarters, 2-3 quarters specifically, I think should take the stock closer to the 4-digit mark, if not break past about those levels. Maruti, I believe after yesterday's price move and the setup prior to that, the last 3 months of a price correction from 11,000, 10,800, 900 levels towards sub 10,000 mark, the stock retesting 200 moving average and then after yesterday's price action showing clear signs of a price volume breakout, I think is also a very good buy from current levels. So it depends now on the risk appetite of investor. If someone is looking at a fresh buy or a fresh breakout candidate, then I think Maruti could probably be one of the stronger candidates over here. But I think if someone wants to ride the trend on the upside, then I would still believe Tata Motors is good for at least another 15% over the next maybe 6 to 9 months.
Yeah, and we should have run the expectations of Tata Motors as well, because of course the earnings will come out today. With respect to the year-on-year growth, we are working with a 21% increase. The profitability is expected to show solid growth of 57%, and it's going to be JLR, which is going to be a bit of turnaround story. But separately, in terms of the OMCs, that's one space which is firing away. BPCL is up around 10%, ONGC is up 4%. Of course, HPCL, IOCL has been doing their bit, and other public sector entities, whether Power Grid, NTPC, they're all firing away in the trading session. But since we are talking about the power sector, let's take it across to my colleague. He's been having this conversation with the Power Minister R.K. Singh. Listen into what they had to tell us.
You see, this segment of the scheme will focus on all those households which consume less than 300 units. Now, for them, electricity will become free. They don't have to do anything. Our organizations, the central public sector undertakings, they will go, they will contact them, they will install the capacity. And that's it. And thereafter, the power consumption for those households which consume less than 300 units will become free. Now, how this will be done will be that, we are increasing the subsidy a bit for those consumers which are below 300 units, who consume less than 300 units. So that we are increasing to about 60% it will be. And the remaining 40% will of course be loan. But that loan will not be taken by the household. That loan will be taken by organized by central public sector undertaking. So the householder does not have to take any loan, he doesn't have to go anywhere. That loan will be paid off by the excess units which are generated. So that will pay off the loan, and the loan gets paid off in about householder, and the excess, the householder will get the benefit, revenue from the excess units which are generated.
Okay, so will you also increase the overall subsidy amount, especially for lower capacity?
For the lower capacities, the overall subsidy will go up to 60%, and for the hill states in the northeast, it will probably go up by 10% more.
Okay, and what about the funding? As per the some,
I have enough. We have sufficient funds, and whatever funds are required, we will provide those funds. There is no difficulty. As I said, we are giving 60% subsidy, 40% will be loan to the banks, and that loan gets paid off by that excess units which are generated. That is how it will be. The householder gets the benefit of 300 units free, and that is only for those households which consume less than 300 units.
in addition to that, one other important aspect which was there in the interim budget is with regard to development of offshore wind energy, which is around 1 gigawatt. That will be and government will provide viability gap funding.
That's the next dimension which we are adding. You see, we've already emerged as a world leader in renewable energy capacity, and in renewable energy pace of renewable energy capacity addition. Now the next dimension is offshore wind. Offshore wind is already, there in the North Sea, the UK, Denmark, etc. They all have offshore wind capacity. We are going to start now.
So that's about the Power Minister talking about the new announcements which have been made for rooftop solar as well as offshore wind. But shifting focus and talking about earnings which are expecting, the largest public sector bank, SBI, is all set to report its earnings tomorrow. What should you expect? Listen into what Gaurav told us.
So SBI will come up with their quarterly results tomorrow, and let's see what Street is expecting. When we talk about net interest income, they are expecting growth of 6% on a YOY basis. When we talk about pre-provisional operating profit, they are expecting a decline of 22% on a YOY basis, because in this quarter we may see an impact of wage rate revision, which was expected to be somewhere in the range of 14%, and SBI had provided in the same range only, but now it has come out at 17%, and that is why we may see a decline in PPOP, and this will also lead to decline decline in PAT almost by 10% in this quarter on a YY basis. Talking about the asset quality, there are no concerns going around the asset quality. Asset quality is expected to remain healthy according to the consensus. And when we talk about loan book and deposits, they are also expected to grow somewhere in the range of 13.5 to 14% during the quarter on a YY basis. We may see some kind of increase in the slippages because BGR Energy, one of the accounts in SBI, may be booked under the slippages this quarter, and that is why this spike may come up. But lastly, according to SBI's commentary, they were expecting some kind of loan growth to be somewhere in the range of 12 to 14%. They also had target to bring the SME NPS down in the coming days, and that is why going on any commentary coming up on the outlook on the loan growth and also any commentary on the asset quality, specifically on the MSME segment, will be important from the management during the call of this quarter. Let's also look at any commentary which is coming up on the cost of funds, because that will drive the net interest margins for the bank from here on. Lastly, let's not forget that the SBI has the best PCR ratio in the industry, one of the lowest loan to deposit ratio, and its cost of deposits is also one of the lowest in the industry, and that is why any changes in these parameters will be also important for SBI during the quarter.
The other one that we're counting down to is also Tata Motors, which is due to report its numbers today itself. Srishti is here with what the ET Now poll is penciling in for Tata Motors.
So actually good set of numbers expected from Tata Motors, and the key highlight will be the JLR EBIT margin. So we will have our eyes on, because we are expecting even an improvement on the JLR EBIT margin on a quarter-on-quarter basis. 7.4% is the expectation this time around, and the key driver will be the volume push. 4% growth on a quarter-on-quarter basis is what we have seen on the volume figure, and that's expected to give a push. India business volumes were actually a mixed bag, almost a flattish volume growth for the passenger vehicle segment, but the commercial vehicle was a drag. 9% volume decline is what we have seen. So not much expectation from the India business, but JLR could really take it higher. On the number front, we are expecting a flattish sort of a growth on a quarter-on-quarter basis on the top line. Coming to the EBITDA number, 3% uptick is what we are expecting, and the consolidated margins expected to improve to 13.3% versus 13.1% in Q2. Other than that, the profit is expected at 4,660 crores. That will be a jump of 23% on a quarter-on-quarter basis. But the key to watch will be, first, I told you that JLR EBIT margin, how these numbers pan out to be, the demand outlook, as well as JLR cash flow numbers is also important to track, because surprisingly this time in the quarterly update the company didn't mention about the cash flow numbers. So how the cash flow numbers and the guidance going ahead pans out to be, we will have our eyes on, but the stock has already seen a significant run up. So let's see how the numbers come out and the stock reaction as well. Back to you.
Thanks so much for that, Mahantesh. The other one which is seeing no respite is Paytm, down another 20%. At what level, if at all, you will be a buyer?
No, because the regulatory glare is such that much of their business related to the payment banks is already facing no future. And there is added suspicion that you may have the situation where their UPI business side of the business will likely be constrained as well, because they'll have to start partnering with a whole host of host of payment services providers and etc. So there'll be a lot of cost restructuring that will get introduced into the business with no revenues flowing in, commensurate revenues flowing in. So we'll have a long period of pain. Very difficult to really understand what will be in their mind. The way to go ahead for the company would be actually segregate the payment bank business into a separate arm and make the shareholders actually insulated, or insulate them from any of the vagaries associated with that. So unless these key decisions are taken by the bank, by the service provider, we will not be able to take any bite in the company right now.
Right, okay, that's the take coming in on Paytm and the comments thereafter. Let's just take a look at some of the BTST trades as well before we step into the weekend. Kunal, what's on your list?
So I'll suggest a couple of buy calls, and the first one which I would suggest at current levels would be Tata Steel. That's a stock which looks attractive. Metal stocks making a comeback, so buy with a target of 150, stop us at 135. And Hindustan Copper is the other stock which is also looking attractive in terms of a breakout, sustaining about 300 levels. 335 is the target, stop loss at 289.
Okay, what about you, Naresh? The BDST trade, you'll have to unmute yourself.
Yeah, so a buy on Tata Steel again. That's a stock which is close to a breakout. Stop loss at 137, target price of 145. Second is a buy on Havells, which has reversed from the recent supports, expecting some follow up here. Stop loss at 1320, target price of 1380.
Okay, those are some BTST trades coming in, while metals, of course, is charged up ahead, led by Tata Steel. That's one of the key gainers, which has also been the top idea from both of our chartists. Reliance as well has had a strong show today that also managed to hit a fresh high. 29.26 is where we're currently at for Reliance's futures, 29.14 on the spot. There's, of course, TCS, Infosys, there as well going pretty strong. There's Wipro as well, which has seen a move of nearly 3% LTIM is not looking bad. Bajaj Finance too has made a comeback. Kunal, for Bajaj Finance in particular, because this was the weak link this week, do you think the worst is behind?
Well, it doesn't look like, because I think even after today's bounce for Bajaj Finance, the stock is I think around 400 points or 350 points precisely below the 200 DMA, which means at least another 5% is what the stock has to recuperate to try and get back into at least a slight positive mode for itself. So, and looking at current market scenario, the recovery, or rather the correction for Bank Nifty from intraday highs, it indicates that maybe the financials could be under pressure for some more days. So I'm not sure whether the next 300 points could be achieved into this kind of a market scenario for Bajaj Finance. But I think only about 7,200 to 50 mark is where one should look to attempt for a buy call over here.
Okay, so that's about some of those big movers. But wrapping up the trading session, of course, it was a day of fresh record highs for ourselves. But from there, we made a complete U-turn. And by the end of the trading session, not only we have flattened out, but we are just around that 21,850 thereabouts. Let's pull up the closing trades as well. In terms of the Nifty Bank, of course, there has been a massive slip of sorts, almost 900 to 1,000 points from the highest point. So the Nifty is ending just around that 45,900 mark as well. The broader markets managed to fare better, whether it was mid-cap or small-cap, both hit the record high level and at least managed to stay in the green, even if they came off the highs. In terms of individual movers, BPCL, IOCL, HPCL, all of these OMCs were gaining traction. The other public sector entities, the likes of Power Grid, NTPC, they were higher by 3 to 4%. IREDA was the other one which saw a good traction and was up around 5% in the trading session. So overall, the week has ended on the positive note. It was a big week with a lot of events, but the next week is going to be the same. We'll wrap up this edition of Closing Trades from the entire team. Thanks so much for being with us.